All right, thanks everybody. So I'm here today with Wayne Bramwell. He is the CEO of Westgold Resources. Westgold is a big position in the Gabelli Gold Fund. I am a portfolio manager of the Gabelli Gold Fund. The stock has done very well for us. Wayne is also known as the Hare in Western Australia because of his beautiful locks, and he should flaunt them if he has them. So if I could grow straight hair like that, I would do that too. And we're very happy to have him here today. Westgold is a $5 billion Aussie-based company. It has mines in Western Australia, 4 operating hubs. We'll go into this in more detail, but 4 operating hubs in terms of a bunch of mines that feed these various hubs, and we'll go into it. But one of the biggest miners in Western Australia. So we'll talk today about what it's like to mine in Australia and what type of advantage Westgold actually brings to mining in Western Australia. So Wayne, thank you very much for being here today.
Pleasure to be here with you today, Chris.
Okay.
Looking forward to this.
Yes. And we're actually at a conference. So the reason that we're together now is because we're at a conference. Otherwise, obviously, he'd be in Perth, and I'm in New York. But so first question is, Wayne, so where were you born?
Yep.
Where did you go to college? How did you start your career? Can you just go in a little bit of detail about all that, how it all started?
Quick potted summary. I'm a West Australian by birth, born in Perth, grew up in Perth, studied in Perth, went to university to do metallurgy, mineral science, metallurgy. And WA is one of those fantastic locations. I mean, we talk about WA as the Silicon Valley of mining. So within the state, we have exposure to every commodity. So stepping into a mining profession, your opportunities to work in different commodities all exist within Western Australia. So in terms of choosing metallurgy as a degree, it was a bit of a happy accident. Didn't know much about the role, but clearly when I started studying in the early 90s, the Australian mining sector imported more metallurgists than it can produce. So job security was always somewhat certain, and the ability to travel was very high. So really, job security and the ability to travel were the main attractions, and it's been a great journey so far.
That's great. So you graduated with a degree in metallurgy. You went to college in Western Australia too, and then you started out in the mining industry.
Very much. So sort of probably a similar transition to a lot of mining professionals. You graduate green out of university with a mining degree or a surveying degree or geology, and you get sent to a mine. So as a metallurgist, my first operational role was in iron ore with BHP in Port Hedland, and so you get thrown straight into a processing plant. Spent 2 years in iron ore with BHP, and then thought, wow, this mineral processing is interesting. I want to do something different. So then went and joined a hot metal company, pyrometallurgy, in the southwest of Western Australia, and that was operating an electric arc furnace to produce silicon. So that was sort of a journey sort of through operations, and then that morphed into a role in an engineering firm where I got to do more work around feasibility study and project management and project development, and that sort of then dragged me back up through, I guess, the org structure to ultimately corporate roles, running an explorer originally as the CEO, then a developer as the CEO, and now into this role at Westgold, which is an operating company.
Right. So immediately before, did you join the board of Westgold?
Yeah.
So before you became the CEO, you were on the board, right? So can you talk about what kind of why you joined the board, maybe what attracted you to Westgold when you did, and then how you made that transition to CEO?
It's maybe a little atypical in some sense. I was actually running a family office in Western Australia for an eccentric West Australian billionaire. Mark Creasy is probably well known to many of your audiences, and during that time got asked to join the Westgold board by the chairman of the time as a non-exec director. The board was going through a phase of refresh, and he wanted new blood on the board, so I joined, and that was 2020. 2020, literally I joined in February 2020, and COVID COVID hit Western Australia pretty much March or April.
Yeah.
So that was an interesting time to join an operating company where all of a sudden you had this impact of COVID restricting movement throughout the world and in Australia. Sort of 2020 to 2021, I'd started to, even though I had a full-time job running the family office as a non-executive in Westgold, I could see inside the business, and I thought, wow, there's some fantastic assets within this company, but it's missing something. It's missing a level of organisational focus, which I can't bring to it as a non-executive. And you know, through a set of circumstances, by 2022, I was offered to come inside the business as the managing director. So I think the moral of that story is be careful what you wish for, and that transition from non-exec on the board into CEO, MD happened in 2022.
Okay, great. And so the family office was in Perth also? Okay, great.
Sure.
Right, yeah, you said. So just if we can take a step back then. So you get there in Westgold, but one of the big benefits to being in Westgold was just the fact that, I mean, it's kind of like, you know, you're saying, when you're a fish swimming in the water, you might not realize that it's that you're wet.
Yeah.
But from our perspective, looking at mining companies globally, it's amazing to see what goes on in Western Australia, Perth, and the Kalgoorlie region and all that. Can you talk about and even from your perspective in terms of running the family office, I'm sure that you looked at other operations around the world.
Sure.
Can you talk about what the benefit you saw of and think you have now of mining in Western Australia specifically?
You know, I've been lucky during my professional career. I've worked overseas. I worked in Africa for 11 years.
Okay.
I worked in parts of the old Russian Empire. I've worked in Asia, and Westgold's appeal was, in some sense, its name. Yeah. All the operating assets were in Western Australia, so really easily accessible, and one time zone, which was very attractive. But WA is a great place to operate for gold, and as a statistic, today I think there's 42 operating gold mines in Australia.
Right.
29 of them today are operating in Western Australia. So you know the bulk of the gold production in Australia today still comes from Western Australia.
Yeah.
I mean, as a country, I can speak to that. I mean, Australia produces 9 million ounces of gold a year. 29 of those operating mines are in WA, so the bulk of that 9 million ounces has still been coming out of a state where I grew up.
Yeah, right. So, okay, now, the other thing, again, that I find striking about it is that I was there and I visited one of your mines in November.
Sure.
And the thing about Perth that I noticed is that, this is my second time there, but it is a big, beautiful, fantastic city. Looks a lot like San Diego to me. But you see people in the airport in their mining gear, and they're walking in their mining kit, you know what I mean? And there are people walking around the street in mining kit. Yeah. And then you go to Kalgoorlie, which is like a 2-hour flight inland from Perth, and that's again a beautiful little town, you know, where there's like it's a mining town. But I would have figured, you know, when I first went there, a mining town, I figured I'd have to go to a bar and fight my way to the bar to get a drink or something. And there are yoga places and beautiful espresso bars and things like that we've spoken about. And it's a town of 20 or 30,000 people, and it's all mining. Like that's all anybody does, mining, and then obviously servicing the miners. But can you talk about the advantage to that aspect of like just being in, like the skills that are there, being in Perth and in Kalgoorlie, and just that part of being in Western Australia compared to Africa or Russia or whatever?
Well, even on an Australian basis, I mean, WA understands mining. I mean, it is Australia's gold is now Australia's second largest revenue earner. Oh, wow. So the bulk of that revenue is coming out of Western Australia. WA, because of its mineral endowment and resource endowment, you know, is a resource state. Whether it's gold, iron ore, critical minerals, or oil and gas, that's what WA does. You know, we have an agricultural industry, but it's dwarfed by the resource sector. So as you say, in Perth, which is on the far west coast of Australia, you walk down the main street and you see people wearing mining logos and what we call high vis.
Yeah.
You don't see that in Sydney. On the East Coast, you don't really see, certainly don't see that in Victoria. So I guess the visibility and the understanding of the resource sector in WA is very front of mind to everyone in the community,
Yeah.
because they know that's what we do. The press talk about mining stories every day, sometimes positively, sometimes negatively, but you know, mining, the connection and the contribution of mining and resources in WA is very front of mind.
Yeah.
On the East Coast of Australia, probably not so.
Right. And you could even see, so, you know, again, you juxtapose all this for me being the maybe I'm the, I don't know, I was going to say, I'm not a fish jumping in, maybe I'm the squirrel trying to get a nut jumping into the water in Western Australia. And here in the Northeast United States, where I grew up and everything, you don't really get it. Like mining engineering, forget it. Like nobody here would even think of doing that for a degree. And geology, like no, you know, like maybe some kind of obscure thing, you know, like research, PhD, but not real mining geology. And in Western Australia, you have colleges which are dedicated, like universities dedicated to just mining engineering, right? Can you talk a little, and like the skills that are embedded there?
Certainly, I can talk to that in some detail. I mean, in my later life, I did a master's degree through the West Australian School of Mines, and it's a finishing school, if you like, for mining professionals. Very well known. I mean, could we call it the Harvard of the mining in WA? Certainly, probably more akin to the Colorado School of Mines in a North American sense, but certainly the West Australian School of Mines for many years, Chris. I mean, it didn't generate enough professionals for the industry. You know, the industry, I think, specifically gold, has been quite poor about showing young people about what the careers that you can have in it. That's changed in the last 10 years, and I can tell you now, the West Australian School of Mines intake for this year was something like 130 young people who were doing degrees in mining engineering, metallurgy, surveying and geology. That's like a big number historically for this school. Okay. So it's been like a tide, as the industry has been quite cyclical, but the tide very much at the moment is in. People are seeing the career opportunities in it, and these schools are now generating more graduates. But still, even say 130 graduates coming out of that school this year is not enough to keep these industries going. And from a Westgold perspective, we're now bringing young graduates from the UK who have maybe it's a North American story too, that those schools are generating a lot of mining graduates, but there's no jobs for them.
Okay.
In Australia, and even Western Australia specifically, we still have got a lot of employment, and we're under-resourced for people. So I encourage, you know, young North American and Canadian graduates, if you're doing metallurgy, mining, surveying or geology, jump on a plane, come to Australia. It's a long way, but there's opportunities there.
It's beautiful. It's a beautiful place. So great. And then, so I guess more specifically then, if we kind of hone in a little bit on Kalgoorlie, where you have, where I visited your Beta Hunt mine. Can you talk a little bit about the benefit of being in Kalgoorlie specifically, and in terms of the infrastructure that's there, and how that that was a relatively recent acquisition, Beta Hunt, and kind of what you saw, what you liked about Beta Hunt and Higginsville, which Higginsville's close to Beta Hunt, near Kalgoorlie as well. But can you talk about like what you see there in terms of an infrastructure perspective that makes it attractive to you?
Just for context, and maybe for your listeners, you know, Kalgoorlie is the epicenter of the West Australian gold industry. You could even look at Kalgoorlie, and there is a similar town on the east coast where, you know, when you think about gold, you may think about Ballarat or Bendigo. In Western Australia, Kalgoorlie, if you like, is the epicenter of the gold sector. And our appeal to assets that we acquired south of Kalgoorlie really was, it was prime real estate. I mean, it's a tier 1 address for gold, and the gold fields in Kalgoorlie, I mean, they've been mining gold in one shape or another since the early 1800s. You know, there's still, even though it's what you would think is a very mature gold field, there's still a lot of opportunity down there. And again, much similar to maybe some North American mining fields, you know, it's been gone through periods of people are consolidating land packages and then breaking it up, and so there's ownership changes. But within the ownership changes, there's always opportunities to grow. And the goldfields for us was the mineral endowment of the goldfields, whether it's the northeastern goldfields north of Kalgoorlie or the southern goldfields where we work. The mineral endowment in those two belts is probably the biggest endowment within Western Australia. Hence the appeal.
Right, and we can talk about that. And the other thing is that it's right. You can drive to site, like you could
completely. I mean,
have a nice espresso for breakfast, and
Australians are like quite, have certain standards around coffee. I mean, thank you. The Italians brought coffee to Australia in the 40s, and we have taken to that coffee like demons. Yeah. But the real appeal for Kalgoorlie is it's such a strong service base. It's a mining town. All the resources you need to run and operate mines in that region are there. Whether it's labour, heavy equipment, underground equipment, people to do surveying or exploration companies. There's a resource base there which makes doing business around Kalgoorlie much easier than some of the other parts of Australia.
Yeah, I was talking to somebody else at a conference here, and they are operating a mine in British Columbia, like kind of remote British Columbia, and they had one part of a coupler on a gearbox, and it took him 8 days to get that one piece of equipment, right, to put it on the to be able to remove it, whatever it broke, and whereas you guys, there's something right in town, right? I mean, like there'd definitely be like another coupler, 20 of them in inventory right in town.
And certainly, I mean, it's a small town, Kalgoorlie. It's 5 hours drive from Perth, but it's well resourced and well serviced. I mean, it's a town now which is being regenerated in some sense. There's plenty of work there. The government's putting more services into Kalgoorlie to try and bring people back into the town, because much of our Australian mining industry now is really fly in, fly out, where you can live in Perth and you can fly to a remote project and work for 7 days, 8 days, and then fly home. That thematic is, in some sense, no one really wants to work in a fly in, fly out basis. I mean, really, those regional towns have suffered over the many years when fly in, fly out has become more prevalent. I mean, as a young professional, I worked in Port Hedland. It wasn't fly in, fly out. It was a mining town. There was a stronger community. Yeah,
it's nicer. Yeah. So hopefully that'll. Do you think there's the potential for that to start coming back into?
I think so.
Places like
I think so. Certainly in Australia now, there's far more focus on trying to reactivate a lot of these regional towns, and mining's key to it. Yeah. As the sector is strong, these projects are getting bigger. So if that drags more people into these regional towns like Kalgoorlie, where there's plenty of employment, and that's the key. Plenty of employment. Often the struggle in these towns is accommodation. Yeah. And that's where government and industry are working together now to try and remove some of these hurdles so that more people can come to these regional centres and live.
Yeah. Okay. Great. So kind of continuing with that point. There are a lot of people in Australia. There's an enormous, in Western Australia, who are capable of doing mining, great skills base, but there's still a shortage. Yep. So you have these highly skilled, highly technical individuals, and also management, but not enough of them.
Sure.
Can you kind of talk about how you then, from a mining perspective, how you're able to kind of deal with that in terms of a high cost of labor, but then how you're able to balance that with high efficiencies?
Yeah, and very much. The total population in Australia today is 28 million people. We're a big island with not many people down there. The mining sector now, and the gold sector specifically, second largest earner of export revenue, only behind iron ore. This is an industry which continues to need people. So what do we do in a scenario where our demand for labour is very high but the supply is short? We have to go to technology. I mean, speaking to that, over generations now within our sector, we've had no choice but to substitute technology for labour because we couldn't get the labour. So Australian mines now are quite different than North American mines that I've been to, whereby there's a lot more use of equipment, whether it's drills, trucks, or the way we go about mining, and a smaller physical workforce. In Australia, that's been driven because we just couldn't get the labour. We've been a net importer of mining skills for a long time because our schools haven't been able to generate the volume that we needed. And companies are trying to work around that in two ways now. Spending more capital on trying to bring new people into the industry and train them, show them that the career has opportunity, and then the other thing is trying to retain the talent that we've got. So yeah, it's an ongoing struggle, labour, but I think at the moment where the world's at, and certainly within Australia, the broader society is starting to understand the contribution of the sector, and starting to see it now more as a change, as a positive force for change, not something which is destructive to the environment.
Right. And you guys are able, I think you were telling me before this interview started that you get around 700 meters per month in development, and which is a high number, and you guys are really experts in underground development and being able to do it efficiently, which I think is a huge benefit. Can you talk a little bit about Westgold's a little bit different also in terms of it having an employee-based workforce that works underground, as opposed to most others in Western Australia, which are contractor-based, what the positives and negatives that are, and also what you're doing specifically to kind of help lower your turnover, and also how you might be positioned relative to others in terms of getting your turnover maybe lower than others.
It's a key point, Chris, and certainly in North America or Canada, quite typical that you're an owner operator, that the people who are mining the ore bodies are employees of the company. In Australia, it's probably the other way around. There's been a shift at the moment in the last probably 2 decades towards the owner of the ore body having contract miners, a separate company mining that ore body for the owner. Westgold's gone through this sort of transition in the last 4 years, whereby when I first started, we had 7 underground mines running, and we operated all of them. So we were an owner-operator, and the negatives in that is because you're an owner-operator, you're running a much larger workforce, and you've got a much larger capital exposure to the equipment. As a contract miner, you're not exposed to that workforce directly. You as the contractor are bringing those people, they're yours, and you're bringing your equipment. So we are, as the owner, only exposed to the people and the capital via your monthly charge.
Right.
So in some sense, not being an owner-operator normally reflects in a smaller workforce and sometimes a higher operating cost. Where we are now in the Westgold journey, still 7 mines running, 5 we operate ourselves, and now we have 2 smaller assets run by contractors.
Okay.
So what we're trying to do now is as we start to change that balance from 100% owner to a more hybrid model of some owner, some contractor, is put more variable cost into our business and try and increase our productivity. So I'm not sure what the right answer here is here, but certainly as when we were full owner in all of our mines, our cost structure was higher because we were exposed to more people, which in an environment where labour is short, that's a problem.
Right. Okay.
And with 7 underground mines running, every truck, every drill, every loader, we would have to purchase ourselves.
Right,
so there's a capital exposure and a cost exposure to the people.
Right. Do you think it helps at all from a turnover perspective if you're an employee of the company, or not so much?
I think so. I think we've with our own workforce over the last 4 years, certainly we've changed the way we remunerate our employees, and now they can buy shares in our company. So I very much see that the employees who they love these mines, and often they love the people they work with. Now that they've become shareholders of the company, they're already invested emotionally. Now they're invested physically. It's harder to generate that level of, I guess, loyalty in people who are contractors who, and this is how transient some of the workforce can be in our state, because there's so much work. Like, for argument's sake, if you're a Westgold employee today and you and I have a fight and you want to leave, well, then the next day you'll have a new shirt and a new job, and you can move on to any one of a multitude of mines. So that level of demand for labour makes parts of the workforce very transient and can
Right.
impact employee costs.
Right. Interesting. Okay, that's cool. But the big picture. Okay, it's interesting because it's like another way to think about it, which I hadn't really thought about before. It's almost like a capital light model
Very.
in Western Australia, and we've noticed also that a difference between, say, North American mining and development companies and Western Australia specifically is that, like, in North America, they'll tend to delineate a very big project, and then, with a lot of exploration spending, and then show that to the market, and then try to raise all the capital at the get-go, which is typically a big chunk of change to build the whole thing. And in Western Australia, it seems like the model is a little bit different in that, because it is capital light, you can get started pretty quickly. So you might not have found the whole deposit, but you found some of the deposit, and you can get in there quickly, start developing it, especially if you have the mills already. So can you talk about how that model and that idea of of finding a resource and then maybe and mining it without having it be like a long mine life might be a benefit, and then how the market might be missing some of the full value there?
It's a really good point you speak to. And when investors look at North American gold companies and Australian gold companies, they see two very different things. And specifically to your point, a North American gold company or a gold operation, maybe it has a minimum of a 10-year mine life.
Yeah.
And North American investors will go, if it doesn't have a 10-year mine life, well, why? And they look at Australian gold companies and they may, wow, all of these companies and these projects on face value may have a 3-year mine life. And why is it so different? Is there no gold there?
Yeah.
Not the case. It's more about that. You're right. Maybe the Australian company's approach is let's drill out a project where maybe it's got a 7-year life, of which maybe the first 3 or 4 years is measured and indicated, and we can get started, because we know that once we make that transition from explorer to producer, once we've got a cash flow, we can reinvest that money into drilling to extend the mine life, as against the North American ways, as you say, take all the money up front, de-risk it up front, which is much more heavy in terms of capital or equity, where the Australian way may be, okay, let's not take all that dilution up front. Let's get on the park, let's get this thing running where we've got a revenue stream, and then instead of going to the market for the equity to continue to drill, maybe that business becomes more reliant on its own funding. So there is, the Australian approach is very, very different. I mean, equity is always available, but on face value, Australian gold assets may look very different to North American gold assets in terms of mine life. And a case in point would be one of our smaller Westgold mines, say the Starlight mine, which it started in 1998, has had and is running today in 2026. I think over all its journey, it might have only ever had on paper a 3 or 4 year mine life, because as an underground mine, you're limited to what you can drill. Where we are today in that mine, it's got a 7-year mine life. The only thing we did differently is probably taken a North American approach to it. Once we were operating it, we just drilled it intensively, and we kept drilling it to the extent where now it screens differently than a typical Australian asset, where people look at it and go, 7 years. Well, that's atypical for Australia, but may look still atypical for a North American investor who would say, well, why isn't it 10? Right. There is some nuances in the markets which may provide opportunities for investors who look through and try and understand why typically an Aussie company may screen differently than a Canadian or North American.
And also, it's right. So, and maybe to focus a little bit more on Westgold, the benefit to you guys of having the installed capacity, that milling. So you have 4 mills, right? You have 4 processing facilities throughout Western Australia, and you're benefiting from, there's another company, New Murchison, right, which is feeding ore to you, and that's extremely capital light for them, but it benefits you because you have that installed capacity. Can you talk about kind of, and even in terms of your own exploration, how having that sunk capital helps you guys?
Very much, and this is not me speaking as a metallurgist, it's me speaking as the leader of the business. I see certainly in the Australian gold landscape, the owners of the processing plants now have strategic power. You know, if you're trying to build a new processing plant in Australia, depending where you are, you know, if you are an explorer moving to producer, that journey can be 10, 12 years. I mean, if you're an advanced explorer and you've got a very good resource, maybe there's a 3 to 6 year timetable to go through permitting, native title, environmental approvals, financing, raising debt, ... to the point you can get a revenue stream. So the strength I see within the Westgold business is we have all this sunk capital in 4 processing plants. And what we've tried to do now in the last several years is to look at how do we leverage that sunk capital. We've got strategic power in the Murchison, having these 3 processing plants, and we've got a large one in the Southern Goldfields. But we've looked to ways to leverage that through actually what I call co-opetition. We look at some of the junior explorers around our processing plants and go, and New Murchison is the case study. We're drilling an explorer, drilling an open pit target we really liked. We took a small equity stake in their company and had a very frank discussion with the management. Their ore body was getting bigger, and we said, guys, look, we're small shareholders in your company now, but where you are in the journey is you're at a crossroads. You can choose the typical model of a 3 to 6 year process to get to a revenue and become a producer, or we can give you an alternative. Here's an ore purchase agreement where you go mining, we'll buy the ore, and we'll basically both groups of shareholders benefit. We got the access to a soft oxide high-grade ore, which made our processing plants run faster and increase our output, but it also injected cash into this explorer, which very quickly went from a market cap of, I think, Chris, it might have started at 50 or 60 million Australian dollars to sitting at around 350 million market cap today.
Yeah.
Most importantly, that company has, at the end of March quarter, about $150 million of cash inside it. So what has this agreement done for them? It's provided them capital to continue to explore and expand their operations in terms of mining output, knowing that they don't have to go and build a processing plant, that we will happily buy this ore from them, and both groups of shareholders benefit. So
as well, right?
so
So if they find more, you guys could, will
100%,
probably process it and just make some very low risk.
Yeah. And so we as a company, Westgold, have zero risk exposure to the mining risk. They mine, they screen the ore and sample it, we buy it. So it works for us. It's been very positive in terms of generating cash for our shareholders, but also for theirs, and of which we are now one. We are, I think Westgold is 16% shareholders in New Murchison. And I really, really like this model of sort of not competition, but co-opetition. It's helping that company. We've effectively, Westgold has been the catalyst to generate a new gold producer in Australia. Yeah. So single-handedly, by them having access to our processing plant, they become a producer, and we're starting to replicate this model with others.
Okay, great. And that's still a very small part of your business. The real big important thing is like the exploration that you're doing, and with you have all these exploration targets. And I guess also in terms of the Sun Capital, like one story that's a good one is the Bluebird South Junction, and now Polar is the other Polar Star, which is right very close to your mill. And again, you were able to get that into production with a small resource, but the resource has grown pretty substantially. Could you talk about that for a sec?
It's also another way of sort of a model which is very common in Australia, maybe not so common in North America, which we call hub and spoke. Yeah. The hub is the processing hub, and when we talk about the spokes, it's remote mines feeding the hub. That's really common in Australia, and often some of those, the hub being the processing hub, in some cases you can truck ore 200 kilometres away if it's got grade to that. That bakes in high costs into people's business. So a really optimized model is a very big hub with a very short spoke, and specifically to Bluebird South Junction, which is now our largest mine in Meekatharra. This was 2 open pits that were mined in the 1980s, 1990s, which were run by open pit operators. Those mines closed, not because they ran out of gold, but because as soon as the ore started to get into fresh ore and it was hard, the open pit operator just moved to the next shallow pit. Westgold very much has been investing in Bluebird South Junction now for 4 years, specifically because the mine is within 600 metres of our processing plant. Up until the time we started to develop this underground mine, we were still hauling ore from 200 kilometres away to feed this processing hub. Right. Now, we direct haul from Bluebird South Junction, 600 metres up the ramp to our run-of-mine pad, and that's starting to see our cost base fall in Meekatharra. So specifically to our exploration programs, over the last 12 to 24 months, the focus has been very much to shift our cost base. We need assets or mine operations much closer to our hubs. So there's been a very strong focus on infill drilling of our existing undergrounds or shallow targets, which are much closer to our mills.
Yeah, makes sense. Okay, great. So so Westgold, again, a very solid balance sheet, a net cash position, I forget how much, but how much is it again?
At the end of our March quarter, sort of circa 850 million in cash, liquid investments and bullion.
Yeah, so a huge cash balance, a very solid position, big free cash flow generator with growth. Can you just kind of sum it up now in terms of what the Westgold proposition is?
This business now is 10 years old, and for the first 7 years it sort of established itself. In the last 3 years it went through a turnaround, and now it's on this growth path. With the balance sheet we've got, the reason we've been growing this balance sheet so strongly is what we want to do is be able to internally fund the growth for the next 3 to 5 years. So the cash that we've got now is really funding a transition in the business, and the transition in the business has been a business which was mine constrained, which means our mines didn't generate enough output to keep our mills filled. So the gap in our production was made up of low-grade stockpiles. That was driving our costs up. Through 4 years of solid drilling now, and now that our mines are starting to be more productive, we've shifted from being mine constrained to mill constrained. Now we've got too much ore for the milling capacity we've got. So the transition of the business now is about plant expansion and expanding our hubs with the Higginsville hub in the Southern Goldfields, the first processing plant which has been approved for expansion. We've got 4. I can certainly see there'll be at least another 2 plant expansions over the next 2 to 3 years. Ounce production up and our unit cost down.
That's great. Okay, great. That's fantastic. And so it's just going to be continuing free cash flow growth and to the benefit of all of us North American shareholders.
Very much. It's about, the portfolio of assets we've got are very deep, and we understand the portfolio we're operating now. I mean, we keep finding new opportunities in our business through drilling, so we don't have to look outside the box of assets we've got. So in terms of organic growth, that's our focus, and we're fully funded to bring those things on.
That's great. Okay. Thanks, Wayne. I really appreciate it.
It's been fantastic, Chris.
Thank you. Okay. See you soon.
Thank you.
This interview was recorded on June 12, 2026. Christopher Mancini is the Associate Portfolio Manager of the Gabelli Gold Fund. As of March 31, 2026, Westgold Resources accounted for 2.85% of the fund's net assets. Investors should carefully consider the investment objectives, risks, charges and expenses of the fund before investing. The prospectus and summary prospectus contain more complete information about this and other matters, should be read carefully before investing. To obtain a prospectus or summary prospectus, please call 800-GABELLI or visit https://gabelli.com/fund/open-end/documents/. Returns represent past performance and do not guarantee future results. Current performance may be lower or higher than the performance data quoted. Investment return and principal value will fluctuate, so, upon redemption, shares may be worth more or less than their original cost. To obtain the most recent month-end performance information and a prospectus, please call 800-GABELLI or visit www.gabelli.com. Investments related to gold and other precious metals are considered speculative and are affected by a variety of worldwide, economic, financial, and political factors. Investing in foreign securities involves risks not ordinarily associated with investment in domestic issues. Funds concentrating in specific sectors may experience greater fluctuations in value than funds that are more diversified. Not FDIC insured. Not bank guaranteed. May lose value. Distributed by G. Distributors, LLC, a registered broker-dealer and FINRA member firm. 1 Corporate Center, Rye, New York, 10580.